results. So let's get started with an exam kit question on risk and uncertainty, the ticket agent. So this is the question extracts. For popular artist, he sells 500 tickets. For lesser known artist, 350 tickets. And for unknown artist, 200 tickets. Frequency of the concerts will be. So the probability has been given. With popular artists, it's 45%. With lesser known artists, it is 30%. And with unknown artists, it is 25%. Calculate expected demand for the tickets per concert. Expected demand is nothing but the average demand. Now, we've already studied expected value in part 1. That is the average profit received in the long run. So we can adopt the very same formula of expected value for finding out the expected demand because both are averages. So the formula for expected value is sigma px. So we use the very same formula. So expected demand is also sigma px, where p is the probability and x is the outcome. Now, there is a 45% chance that he sells 500 tickets. So that is a first outcome. So probability multiplied by outcome, it is 0.45 into 500. Now coming to the next outcome, there is a 30% probability that he sells 350 tickets. So we have to add, it is 0.3 multiplied by 350. Coming to the last outcome, there is a 25% chance that he sells 200 tickets. So plus 0.25 into 200. So the expected demand comes to 380 tickets. Now going to the second part of the question, calculate level of his purchases of tickets per concert that will give him the largest profit over a long period of time. Long period of time, what does it mean? It means that the decision is to be repeated many times, which means that we have to use expected value or EV for the decision making. And the profit per concert that this level of purchases of tickets will yield. It means that we have to guide the ticket agent as to the number of tickets that he has to buy if he has to make the maximum profit in the long run. That is the reason why EV is adopted. Now coming to the B part, calculate the number of tickets the agent should buy based on the following criteria, that is Maximin, Maximax and the Minimax regret approach. Now for any of these, we have to first construct the payoff table or the profit table. So let's get to the question extracts to construct a payoff table. This is the discount per concert. If he buys 200 tickets, he gets a discount of 20%, and discount is nothing but the profit that he earns. And if he purchases 300 tickets, he gets a discount of 25%. 400 tickets, the discount is 30%, and greater than or equal to 500 tickets, the discount is 40%. So the profit is different based on the number of tickets he buys from the concert hall. Tickets to be purchased should be decided in advance. Purchases must be in full hundreds. What do you mean by in full hundreds? Which means that you can either buy 200, 300, 400 or 500. You cannot buy 250 because it should be in hundreds. Now, for popular artists, he sells 500 tickets. For lesser known artists, he sells 350 tickets. And for unknown artists, he sells 200 tickets. This information we already saw. What is this exactly? This is nothing but the demand for the tickets, or that is the uncertainty. Now, in order to construct a payoff table, we need to take the decision as the column headings and the uncertainty as a row headings. So we know the uncertainty, but what is the decision to be taken? The decision to be taken is whether to buy 200 tickets, 300 tickets, 400 tickets, or 500 tickets. So that is the decision. So that will come as column headings. Should we buy more than 500? No, because the maximum demand is 500 tickets. So there is no question of buying more than 500 tickets. So we have got the row and the column headings. So let's construct the payoff table. So the decision is the column headings. The ticket agent has an option of buying 200, 300, 400 or 500 tickets. That is coming from here because that is a decision that he has to take. And what is the uncertainty? The uncertainty is the demand of the tickets. So it can either be 500 350 or 200. So we write that too. So the skeleton of the payoff table is complete. Now we have to calculate the profit that he gets under each situation. So as I said, the discount that he receives is the profit that he earns. So let's write working note 1 for calculation of profit and the purchase price of the ticket. Now the ticket price is $30. Okay. And the discount that he gets is 20% on the selling price. That is 20% of $30. What is the profit that he gets if he buys 200 tickets? It is 30 into 20%. What is 30? 30 is the ticket price. That's the selling price. And he gets a discount of 20%. So $6 per ticket, he gets the discount, or that is his profit. So what is the purchase price of the tickets? It is $30 minus the discount that he gets of $6. So it is 24. Now coming to the next situation. If he buys 300 tickets, he gets a discount of 25%. So it is $30, which is the selling price, multiplied by 25%, or the discount is 7.5. So what is the purchase price? Purchase price is $30 minus the discount of 7.5, which is 22.5. Now coming to the third situation. If he buys 400 tickets, the discount is $30 multiplied by 30%, or $9. So his purchase price is $30 minus the discount of 9, or $21. Now the last situation, if he buys 500 tickets, the discount is $30 multiplied by 40%, or $12. So his purchase price will be $30 minus 12, or $18. So now we know the profit that he gets under each situation and the purchase price at which he buys from the concert hall. Now we will see the other information which is given in the question. So I've just copied the working note 1 that we have already calculated. Now in the question, it is mentioned the ticket price is $30. Unsold tickets are returned to the box office. If box office sells these, he receives 60% of the price. 60% of price means 60% of the selling price of $30. 10% of the returned tickets are sold by the box office. If at all he is unable to sell any tickets, he can return this to the box office. Out of these return tickets, the box office is able to sell only 10%, which means that 90% of the return tickets the box office is not able to sell. Now let's see what is the amount that we get from the box office if we return the tickets. Now we know that 10% of the returned tickets are sold by the box office, for which the ticket agent gets 60% of the price. So let's make a working note for that. Selling price on box office sales per ticket, it is $30, which is the normal selling price, multiplied by 60%, which is the percentage that the box office gives. So for all the returned tickets, which the box office is able to sell, the ticket agent will get $18 per ticket. So with these workings, that is working note 1 and working note 2, we shall construct the payoff table. Now there could be 3 situations. 1, the ticket agent is able to sell the tickets to the public. The second is the ticket agent cannot sell the tickets to the public and he returns it to the box office, for which he gets $18 per ticket if the box office is able to sell the tickets. Now the third situation is the ticket agent is not able to sell the tickets and he returns it to the box office. And the box office is also not able to sell the tickets, for which he will not get any amount. That is, the selling price will be 0 in such case. So now we will construct the payoff table, and let's start with the first situation. So the first situation is he buys 200 tickets and the demand is 500 tickets. So let's write working note 3, the profits when he buys 200 tickets and the demand is 500 tickets. So since the demand is 500 tickets, the ticket agent will be able to sell the entire 200 tickets. And what is the profit that he gets? He has bought 200 tickets, which means that his profit is $6 per ticket. So we shall make a note of it. 200 tickets multiplied by 6, or the ticket agent gets $1,200. And since he has sold the entire quantity of tickets, he will not be returning any tickets to the box office. So sold by the box office and unsold by the box office is nil in this particular case. because there are no tickets unsold by the ticket agent. So we shall write this amount 1,200 here is a profit that the ticket agent will get in that particular situation. Now coming to the second situation, that is when the ticket agent buys 200 tickets and the demand is 350 tickets. Since the demand exceeds the tickets bought by the ticket agent, he will be able to sell the entire quantity of 200 tickets. So here again, the profit will be 200 tickets which he sells to the public multiplied by $6 per ticket, which is the profit. So 200 into 6, again 1,200. So we shall write that in that slot. Now coming to the third situation, he buys 200 tickets and the demand is also 200 tickets, which means that again he will be able to sell the entire quantity of 200 tickets. So the profit that he makes when he sells to the outsiders is 200 tickets multiplied by 6 or 1,200 again. So we write that in the slot. The next situation is he buys 300 tickets and the demand is 500 tickets. Again, the demand is very high, which means that he will be able to sell the entire quantity of 300 tickets. But please note, when he buys 300 tickets, the profit that he gets per ticket is $7.5. So what is the amount that he gets as profit? 300 tickets sold to the public multiplied by 7.5, which is the profit per ticket. So it is 2,250. Does he have any unsold tickets? No. So both these items will be nil. So the amount that is to be written in the payoff table is 2,250. Now coming to the next situation. He buys 300 tickets and the demand is 350 tickets. Again, he is able to sell the entire quantity of tickets. So the profit that he gets for the sale to outsiders is 300 tickets multiplied by 7.5 or 2,250. So we make a note of that. Now coming to the next situation. He buys 300 tickets and the demand is only 200 tickets, which means that he will be able to sell only 200 tickets. So 100 tickets unsold. So let's take the first case, sold to outsiders, 200 tickets multiplied by 7.5. That is the profit per ticket. So it comes to $1,500. Now coming to the quantity which is sold by the box office. 300 tickets he bought. 200 tickets was the demand. So he was able to sell only 200, which means that 100 tickets is unsold with him. He takes it back to the box office and it is mentioned in the question that 10% of the return tickets are sold by the box office, which means that sold by the box office is 100 tickets, that's a return ticket, multiplied by 10%. And what is the profit that he gets on these return tickets? Selling price that he receives from the box office is just $18. And what was his purchase price? Purchase price is 22.5. So what is his profit? 18 minus 22.5. So we get the final profit as a negative figure, negative $45. Now, out of these 100 tickets which are unsold, only 10% has been sold by the box office, which means that 90% is unsold by the box office. So unsold by the box office is 100 into 90%. And what is the profit that he gets? He does not get any amount from the box office. So the profit is 0, which is the selling price because he doesn't get anything. And 22.5 is the cost price of the ticket. So totaling the three together, we get a total profit of 570 negative. So we make a note of negative 570 in the payoff table. He buys 400 tickets and the demand is 500 tickets. So since the demand is more than his purchase quantity, he will be able to sell the entire quantity of 400 tickets. And what is the profit that he gets? If he purchased 400 tickets, the profit is $9 per ticket. So if he sells to outsiders, the profit that he gets is 400 tickets multiplied by 9 or $3,600. And since there are no unsold tickets, both these will be nil. So we write 3,600 in the payoff table. Now coming to the next situation where he buys 400 tickets and the demand is only 350 tickets, which means that he will not be able to sell the entire quantity of 400 tickets. What is the unsold quantity? It is 400 minus 350 tickets, or 50 tickets will be unsold with him. Now let's go to the working note. For sold to the outsiders, he is able to sell only 350 tickets. And what is the profit that he gets? Profit is $9 per ticket. So it is 350 into 9, or $3,150. Now, how many tickets are unsold with the ticket agent? It is 400 minus 350. So that is 50. So we make a note of it here. 50 tickets are unsold, out of which the box office is able to sell how much? 10% of the return tickets. So 50 tickets multiplied by 10%, box office is able to sell. And what is the price that the ticket agent gets from the box office? It is $18 per ticket. And his cost price is $21. So what is the profit? It is 18 minus 21, giving a net amount of negative $15. Now regarding the quantity which is unsold by the box office, 50 tickets, out of which 90% the box office is not able to sell because they are able to sell only 10%. So 50 into 90% unsold by the box office also. And what do the ticket agent get? Zero. He doesn't get anything. So the profit is 0 minus $21. And what is $21? The purchase price of the ticket. So the net amount comes to negative 945. So the total will be 2,190, and we make a note of that in the payoff table. Now coming to the next situation, he buys 400 tickets and the demand is only 200 tickets. So the maximum quantity that he can sell is 200 tickets because that's the maximum demand. So sold to outsiders will be 200 tickets multiplied by 9. What is 9? 9 is the profit per ticket, which amounts to 1,800. And what is the quantity unsold? 400 tickets he bought, only 200 tickets he was able to sell, which means that 200 tickets is unsold with him, out of which 10% the box office is able to sell. So into 10%. And what is the selling price that he gets? $18, and the cost price is $21. So 18 minus 21 is the profit. So the amount comes to negative 60. So we know that 200 tickets have been returned to the box office, but they are able to sell only 10%, which means that 90% is unsold by the box office. So 200 into 90% is the unsold tickets by the box office. And what is the amount that the ticket agent gets? $0. So the profit is 0, which is the selling price, minus the cost price, which is $21. So 0 minus 21, the net amount comes to negative $3,780. So the total of all these three is 2,040 negative. And we make a note of it in the payoff table too. Now coming to the next situation, 500 tickets he bought and 500 is the demand, which means that he is able to sell the entire quantity of 500 tickets. So sold to outsiders is 500 multiplied by 12. That is the profit that he gets in this situation, which is $6,000. So we make a note of it in the payoff table. Now coming to the next situation, he buys 500 tickets and the demand is only 350. Which means that there is unsold tickets, 150 tickets is unsold. That is 500 minus 350. So let's take the case of the quantity which is sold to outsiders. So 350 tickets he is able to sell to the outsiders, 350 multiplied by 12. That is the profit that he makes in that situation. So it is 4,200. Now coming to the unsold tickets. Out of the 500 tickets, he is able to sell only 350. So unsold tickets is 500 minus 350 or 150 tickets. And what is the quantity that the box office is able to sell? Only 10%. So into 10%. And what is the profit? $18 he gets from the box office and $18 is the purchase price, which means that the profit is 18 minus 18 or 0, which means that the ultimate amount is $0. Now coming to the unsold quantity by the box office. 150 quantity is the return tickets. They are able to sell only 10%, which means that 90% is unsold. So 150 into 90%. And what is the amount that he gets? $0. He doesn't get anything from the box office. So 0 minus 18. 18 is nothing but the purchase price. So that's the profit. So you get an amount of negative 2430. You add the 3 figure, the net amount is $1,770. So you make a note of it in the payoff table. Now coming to the last situation, He buys 500 tickets and the demand is only 200 tickets, which means that he will be able to sell only 200 tickets. So sold to the outsiders is 200 tickets multiplied by 12. That's the profit per ticket. So it is $2,400. So he bought 500 tickets. He sold 200 tickets. Unsold quantity is 300 tickets, out of which 10% the box office is able to sell. So into 10%, and what is the profit? It is $18, which is the selling price received from the box office, minus the cost price, that is again $18. So 18 minus 18, you get 0. And unsold by the box office, 300 tickets is a return tickets, out of which 10% the box office is able to sell. So 300 into 90%, the box office is not able to sell, for which the profit is $0. That's the selling price because he doesn't get anything. And $18 is the cost price, so which has been reduced from the selling price to get the total amount as negative 4860. And you get the net amount as negative 2460. So we make a note of it in the payoff table. So our payoff table is complete. Now, what was our question? Calculate the level of his purchases of tickets per concert that will give him the largest profit over a long period. And I said you have to adopt the expected value method. And the question further says that for popular artists, he sells 500 tickets, for lesser known 350, and for unknown 200 tickets. And the frequency is 45%, 30%, and 25% for popular, lesser known, and unknown artists. So we have the probability. Now, what is the decision that he has to take? Either buy 200 tickets, 300 tickets, 400 tickets, or 500 tickets. So what we will do is the probability relating to the uncertainty. What is the uncertainty? The demand. Okay, so we will write on the left side. So I have just copied the probability from the question pertaining to each uncertainty. Okay. Now, how do you calculate the expected value? We have got 4 options. Either buy 200 tickets, 300 tickets, 400 tickets, or 500 tickets. So we will go to the first option. First option is to buy 200 tickets, correct? And for buying 200 tickets, whatever be the case, we will get a profit of $1,200. So what is the expected value? Expected value is given by the formula sigma px. But since it is same for all the uncertainties, we don't actually need to use this formula. For option 1, that is to buy 200 tickets, the expected value will be $1,200 because whatever be the case, he will receive $1,200. Now, if you're adopting the formula also, it will be sigma px. So probability multiplied by outcome. So 0.45 into 1,200. 0.3 into 1,200, 0.25 into 1,200. So you get 1,200 common. So it's 0.45 plus 0.3 plus 0.25 inside the bracket, which is 1. So it is $1,200. So whenever you have got the same amount, no need to use the expected value formula. Now coming to the second option, buy 300 tickets. So all eyes on this column. So the formula of EV is sigma px. So expected value is equal to 0.45 into 2,250 plus 0.3 into 2,250 plus 0.25 into negative 570. So that's what is written here. So the expected value for the second option is $1,545. Now coming to option 3, that is buy 400 tickets. So all eyes on this column. So the expected value is 0.45 into 3,600 plus 0.3 into 2,190 plus 0.25 into negative 2,040. So that's what is written here. So the EV comes to 1767. Now the fourth option is to buy 500 tickets. So all eyes on this column. So the expected value is equal to 0.45 multiplied by 6,000 plus 0.3 multiplied by 1,770 plus 0.25 multiplied by negative 2460. So that's what is written here. So the EV comes to 2616. So which is the highest EV? The highest EV is 2616. So the final decision is buy 500 tickets. Now let's go to the second part of the question. Calculate the number of tickets according to Maximax, Maximin, and Minimax regret. So we will first adopt the Maximax approach. And under Maximax approach, we've already seen in the previous class, that is, it is maximum of maximum. So first we will choose the maximum profit of all these decisions. So coming to first column, what is the maximum profit? It's 1,200. Second column, the maximum profit is 2,250. Third column, the maximum profit is 3,600. And fourth column, the maximum profit is $6,000. Out of which we have to select the maximum. So it is 6,000, which means that the decision will be to buy 500 tickets because that has got the maximum of maximum profits. Now coming to the Maximin approach. Maximin, what did we study in the previous class? It is the maximum out of the minimum. So first we have to select the minimum profits. So all eyes on the first column, what is the minimum profit? It is 1,200. Now coming to the second column, what is the minimum profit? It is negative 570. Third column, what is the minimum profit? It is minus 2040. Fourth column, what is the minimum profit? It is minus 2460. And Maximin means maximum out of the minimum. So out of this, we will select the maximum profit, that is 1,200. So the decision will be to buy 200 tickets. So that was Maximin. Now going to the last approach, that is the Minimax regret. I have just copied the payoff table, and for Minimax regret, we have to construct the regret table. And how do we construct the regret table? We have to find out the best outcome of each uncertainty. So for the first uncertainty, that is when the demand is 500 tickets, what is the best outcome? It is 6,000. Now coming to the second uncertainty, that is when the demand is 350 tickets. What is the best outcome? It is 2250. Now coming to the third uncertainty, what is the best outcome? It is 1,200. Now we will go to the regret table. Now what was regret? Regret is best outcome minus the given outcome. So for the first situation, that is when 200 tickets are bought and when the uncertainty is 500 tickets, the best outcome was to get a profit of $6,000. But what is the given profit? Given profit is $1,200 only. So the person will feel sad. Sad for how much amount? For $6,000, which is the best outcome, minus $1,200. So what is the regret or the sadness? It is 6,000 minus 1,200 or $4,800. So we make a note of it in the regret table. Next situation, when 300 tickets are bought and the demand is 500 tickets. The best outcome is $6,000 minus the given outcome is 2,250, which gives an amount of 3,750 as the regret. Now, next situation, buying 400 tickets and demand is 500 tickets. So the best outcome is $6,000 and given outcome is only $3,600. So the regret is 6,000 minus 3,600 or $2,400. Now the next situation, buying 500 tickets, demand also 500. Best outcome 6,000, given outcome also 6,000. So the regret is 6,000 minus 6,000 or $0. Next, buy 200 tickets, demand is only 350 tickets. Best outcome is 2,250. Given outcome is 1,200. So regret is 2,250 minus 1,200 or 1,050. Next, 300 tickets bought. 350 is the demand. Best outcome is 2,250. We are also getting 2,250, which is a given outcome. So no regret. Regret is 2,250 minus 2,250 or $0. Now coming to the next situation, 400 tickets bought. 350 tickets is the demand. Best outcome 2,250. Given outcome 2,190. So the regret is $60. Next, 500 tickets bought. 350 is the demand. So regret is 2,250, which is the best outcome, minus the given outcome is 1,770, giving an amount of 480. Next, 200 tickets bought. 200 tickets demand. The regret is best outcome 1,200. Given outcome also 1,200. So it is 1,200 minus 1,200, which is 0. Next one, 300 tickets bought. 200 tickets is the demand. So the best outcome is 1,200. minus the given outcome is negative 570. So negative of negative, we have to add both to get 1,770. Now next situation, 400 tickets bought, 200 tickets is the demand. So best outcome 1,200, given outcome is negative 2040. So it is 1,200 minus of minus 2040. So we have to add, it is 3240. Next, 500 tickets bought, 200 tickets is the demand. Best outcome is 1,200 and the given outcome is minus 2460. 1,200 minus of minus 2460 or 3,660. So we make a note of it in the regret table. So the regret table is complete. What is the name of the method? Minimax regret, which means that minimum out of the maximum regret. So first we will choose the maximum regret of each of the decisions. So maximum regret, first column, the maximum regret is $4,800. Second decision, the maximum regret is 3,750. Third decision option, the maximum regret is 3,240. Fourth decision option, the maximum regret is 3,660. Out of which we have to select the minimum because it is minimum out of the maximum regret. So the minimum is 3,240. So the decision will be to buy 400 tickets as it has got the minimum regret. Now coming to the last part of the question, advise the ticket agent with reference to risk perspectives. How many tickets should be ordered based on the answers to part A and B? We have studied in the previous class the risk attitude and the approach to be taken. Now based on the risk attitude, the decision rule will also change. If it's for a long-term business and they are not worried about the short-term profits or losses, always adopt expected value or the EV and order 500 tickets. If the person is a risk seeker or an optimistic person, adopt Maximax, order 500 tickets. If the person is a risk averse or a pessimistic person, adopt Maximin and order 200 tickets. And if the person is a sore loser that is unwilling to take the wrong decision, adopt Minimax regret and order 400 tickets. So this is based on the risk attitude. But should the ticket agent always be guided by the risk attitude? If there was a concert of a very popular brand, say BTS, then everyone will jump and buy the tickets, right? So basically, it is not the risk attitude which he has to consider. He has to see who is the artist who is performing the concert. If he's a popular artist, yes, go for a maximum buy because the demand will be really high. So on a practical note, in reality, the agent may be best advised to insist on knowing who the artists are before having to place an order, because it is based on the popularity of the artist that he should make a decision. With this, we come to an end of today's session. So I hope the exam kit question is clear for you guys. If you have benefited from the video, do click the subscribe and the like button and do share it with your friends who you feel will benefit from the video. So thank you all and meet you in the next video.